So today's the 16th of November and it's a Thursday. These trades that I'm going to show you could be ready by tomorrow. So Australia 200, Kiwi and Euro Pound by tomorrow the 17th of November. Now there may be some trades, there may not be any trades in the end, but nonetheless I'm still going to break these down. I'll start off with Australia 200. So if we go over to the dailies, we can see something very clear here. Clearly we've met an area of value on the left for longs. We've had drive 1, 2 and 3, breaking the lows and coming back in. Now this can be two things. Either this is going long to meet this area above here, which it need quite a steep pullback for, and again it won't just get there in one leg, or this is going to be a sell-off to the next area of value for shorts, which is down here. So how that can be is that we have impulse, this is one larger correction, continuation, and we can just generally, just to get an idea, we can rough out from point A to point B, and we can add that on here, and you can see it more or less reaches about 90% of that area there. So I wouldn't be surprised if this is acting as impulse, correction, continuation to the downside, or nonetheless this could just be a continuation movement to the upside, because we still have met an area value for long. Alright, and the simple way we can decipher between that is what do we get on the lower time frames. That will give us our clue. So on the 4 hour, if I go lower here, I'll just remove this for now because we don't need that on there, and we also don't need this on here as well. We just need to focus on the area that we're trading, which is here. So you can very clearly see this is rejected from that area. We've had a bullish high test go through that, multiple exhaustion candles and then a follow through. What have we had here now? So we've had the follow through, we've had the break of this sort of range here that we've had. Here, we've broken out of that on the 1 hour and we've actually followed through completely with it. Second thing to note is we have an impulsive leg on the left. So as a minimum, even if this was to sell off short term down to here, or even in this overall range, we can still capitalize on a very nice trade here. So I'm now going to add on my ray line here just to mark off the top of that structure, and I'll move over to the 15-minute time frame to also mark off the bottom. And you can see that we have our clearly defined structure here. We have point 1, point 2, and I'm looking for a 2-touch risk entry here. This will be taken on the 15-minute time frame. I don't see why. Yeah, this wouldn't be taken on the 1 hour. This would be a 50-minute execution. And if we get some sort of 3 drive channel there leading up to it, we could also get in on the 5, but it depends on what kind of entry we get. I'll keep you guys posted with that. So that's going to be a really nice trade if that does shape up. I know exactly what criteria and what time frames I'm looking for. If we don't get that entry and this just ends up moving higher and forming this is likely a continuation to move higher. But again, we'll see what we dealt. Kiwi yen. So I've kept these charts blank because I want to reanalyze them for you. If we look at the weeklies, where are the next areas of value on the weekly that we can look at? The major ones. We can see the next one is here. We've already paced above all of this, and we're forming separate structures. So if I go over to the daily, so you can see this a lot clearer, you can see this was one on its own. We came out, broke out, we started to form a larger continuation. In the end, what did we do? We didn't complete. Normally the ruling is that when the correction or continuation supersedes 50% or more of the impulsive leg that formed it, it has a lower possibility of playing out, and you have more of a likelihood of an M-style pattern actually forming here, which is what happened. We broke the highs, broke back in. There are a few trades there as well. We don't need any of this anymore because it's old price action, and now we have a new structure here that we're looking at. So we have point 1 through to point 2, point 1 at the bottom through to point 2 here that we can see. Daily rejection showed itself there. You can also see on the 4 hour time frame, what do we have here? All this middle section movement. And we have the completion movement here, which is the 1, 2 and 3. So let's actually measure this leg here. I want to show you something. So if we measure point A to point B and we actually duplicate that on, you can see that's more or less completed its leg, which is really good. So when you can mathematically assess the situation and price action like that, and you have that confluence, it's an added bonus. You can also see on the 4 hour we do have that rejection. 1 hour time frame, what do we have? We can actually remove this now, again, as we don't need it. We can see that we've had a complete turnaround. Now I'm not going to be looking to take any trades here like this. This is not natural in terms of sequence in price action. However, I'm going to mark on my lows over to here. So if I go over to the 15-minute time frame, I can mark on these lows there, and then I can see area of value. I'm just going to put this in pink here for a minute so it's more clear. Anything beneath this that we get any consolidation, this will naturally be towards the end of New York, going into Asia session, and then that roughly adds up to be about post swap hours UK time, so 11:30 PM, where we get trades, especially on pairs like Kiwi yen. I can get involved here. My stops are more than protected at 10 pips above these lows, and then we've got a clear movement to the left. Anybody who knows Kiwi yen price action knows that this is typical Kiwi yen behavior. and you'll find that a lot of Kiwi and short positions, if you go back and do the testing on this, you will find that on the left there's usually a very impulsive drive movement. Like so, when these trades actually do occur, they sell off very quick. So that's a quick 13 to 14 to 1 that can happen in a single day. That's natural. Yes, we don't get these every single week, but when they do happen, we can capitalize. So that's a simple trade. We don't have to get it exactly where it is, but I'm just giving you the trade idea. It can drop lower and still give you a continuation. As long as it is trading beneath these lows, that is the main thing. Let's move on to the next pair. So euro pound. Absolutely love this one. Now, this one is a bit more on the complex side in quotes, and I'll explain why in a second. So I'm looking at this and I can see it very clearly. I know to some of you this might be very choppy price action, but again, I've been studying the way that we trade for years now. So you can see these things clear as daylight when they do appear. Now let's look left. You can see there, we've got the area of value. What did price show us very clearly? Multiple times it came in, sold off, still couldn't commit. The only other caveat now is it's breaking it with 1, 2, and 3 drives. So let's remove that for a minute and let's look at the structure independent of what it's showing us. So independently, we've got a larger channel. Let me just change the color on this, right? As you can see there, right? That's very self-explanatory. But let's sub-refine this now. So let me go lower and actually show you these highs here that have formed. If I just mark it on with the ray line and I draw the actual structure in, you can now see what we've got going on here. This is a trade based off what the higher time frame is showing me, that it could go at any point. You don't want to get involved in trades or with price action, let's say, where you have one structure going into the next, because then you keep on evolving structures, and the next thing you know, you're getting caught up in something that's actually quite messy. You want clarity. So there's a few things I'm observing here. One, my management will have to be on point. I'll have to make sure I can eliminate risk effectively and as soon as possible, because the overall trade scenario that I'm highlighting here from the higher time frame down is increasing the risk on this trade as we go. So we need deliberate price action and we need spot on A-game management. And if we go to the lower time frame in the 1 hour, we can see that. Something to also reference very quickly. We have a bullish high test here. Naturally these fill. So I am keeping that into consideration. This is why I am waiting for, again, as I mentioned previously with the lows, I'm waiting for these lows here to be broken. Because once the lows are cleared, if they are, then that gives me confirmation. On the 4 hour, we'll have the turnaround. On the 1 hour time frame, we can see that it's broken out of all this mess here. And we eradicate our chances of getting tagged into a trade here. That's only ever just going to fill that wick above top. So I'm waiting for a break back beneath, an hourly continuation filtered on the 15-minute going to London session tomorrow, which is looking like the time it's going to shape up, and I'll get short on that. But I'll keep you guys posted with the entries anyway. I will recap any trades taken or not taken nonetheless on my YouTube channel, and I hope you guys do capitalize if there are any trades.